So let's talk about all the micro details when the market is moving sideways and when the market is ready to change direction. This is called your buying climax, and if it was inverted, it would be your selling climax. This is basically when the buying has stopped. The market was in a bullish momentum and the buying has stopped. And as you can see, as a result from that buying climax, you can see a strong pull. That pull is called a automatic rally. The automatic rally is basically proving the point that that is your buying climax, that sell orders are starting to come in, that there's no more buy orders coming in and sell orders are slowly starting to take over. As you can see, the market rejected. The market rejected from where? Rejected from the BC. And it rejected from what? The extreme of the BC. And this is called a test. Why is it a test? Because the market tested the supply zone at the extreme of the BC. So if BC and AR were your range and the market rejected that supply zone, that is your test. You can see the market took out your test and came back into the range. This is called your purge. This is called your stop hunt. So anybody that sold the market at the test, their stop losses have been taken. That pullback back to your purge is called a RTO, a return to origin. That means price is coming back to test that area one more time before heading to the direction intended, finally switching character. This is sign of weakness. That means the market, okay, this is where you have more proof that the market wants to continue lower because it tested the previous range. And this is your last point of support. Your last point of support is the last point where market is trying to find buy orders to go the opposite direction, but it's finding weakness because as you can see, the sell model has started. And the difference between what I do and other Wyckoff explanations is I switch the last point of support and the sign of weakness. Because in my opinion, the sign of weakness is once price tests the range of the RTO, that's your first sign of weakness. And your last point of support is when price is ready to break out of the consolidation. That is literally your last point of support. So let's take a deeper look into this. So let's take a deeper dive into the basic schematic and how can we fuse it with smart money concepts. Here you have your selling climax, and as a reflection of your selling climax, you have your automatic rally. And this is where you would set up your initial range. What you can see, there's a rejection from that range extreme, and that rejection would be in your extreme demand zone. And that rejection is called your test. And not only institutions manipulated price at that point, retail traders would purchase price there and their stop losses would be right here. For price to later do what? Stop hunt. And that stop hunt is called the purge. Their liquidity would be purged. Price comes back to grab the retail trader's stop losses. Just for price to later do what? Return to origin. So let's go to an in-chart example. So let's go over buy and sell models. So here you have your accumulation, manipulation, and distribution. This is your buy model. Liquidity is resting above the accumulation. And you're waiting for price to finish above the accumulation to absorb the liquidity. So let's go over a chart example. Can you see the buy model? So now, can you spot a buy model at any phase of this Wyckoff schematic? So let's put it all together. So here you're in a overall sell model. Price is bearish. And you can expect price to continue bearish according to the trend. So now that we know that the macro is bearish according to the sell model, what are we looking for? We're looking for a micro time frame sell model to go in line with our overall sell model. So what do we have here? We have an accumulation right here. That means we're waiting for a manipulation here to take price where? Below this level right here to absorb this liquidity. So what do we have here as far as the micro goes? We have a decent pullback. That pullback could mean that this is a buying climax. So let's wait and see if price resets this level or takes the liquidity out. If price doesn't come back to this level, doesn't come back to the extreme or the external and continues lower, then you just move on to the next trade. Okay, so we have a external test here. What are we waiting for? Waiting for price to take out this test level, take these seller stop losses, and at the same time trap the buyers, whoever think this is a breakout, to take price lower and continue with our overall sell model. Price came back into the range. This is our stop hunt, which is our purge. And price finished below the accumulation. So in this bonus lesson, we're going to cover how to use the Wyckoff schematic when it comes to your point of interest. So what you would be looking for is the Wyckoff schematic as an approachment to your point of interest, and you would want this to occur during your purge phase. So you'd want the price to purge and head right to your point of interest and reject from there. So here you have your selling climax. Here you have your test. And what you would look for is this test to be taken out, this liquidity to be taken, and price to head for your point of interest, which is this 15-minute hidden order block. And what happened? Price purged. And then it returned to origin. So essentially you had two opportunities. You had a opportunity to enter the trade here at your purge, which is ideal. And you had a second chance for